Hey, what's up, everybody? This is Evan Carthy from evancarthy.com, and I just want to go over real quick the S&P 500 E-mini futures for May 20th, almost May 21st of the year 2020. And I want to go over real quick some things I've been working on. I know my videos have been liking lately, and the reason why I've been doing a lot of other stuff behind the scenes through meditation, just come up with a little bit tweaks to the way I trade for things that I know I need to do for long-term sustainability. So one of the first things I want to show is I really wanted to figure out why I was using certain Fibonacci levels and which one resonated with me, which ones I like to use, and that kind of stuff. So what I did a long time ago, I created this Fibonacci Excel spreadsheet right here. And as you can see, basically how the Fibonacci thing works, you just add 1 plus 1, you get 2. The next one, 1 plus 2 equals 3, 2 plus 2 equals 5, so on and so on. And that's the Fibonacci sequence right there. And then how you go through and start getting, different Fibonacci numbers is you can just take the Fibonacci sequence and divide them at different levels, and you'll start to get different Fibonacci percentages depending on where you divide them from. So as you can see, where I have this gray area over here, what I did was I just chose one of the Fibonacci numbers. You can see over here, 1597, you add 610 plus 987, that's what you get for it right there. I just chose that one, and then I just started dividing by the Fibonacci sequence, starting off with 5, because really I could have started with probably 233, because anything less than that isn't going to be enough for Fibonacci retracement. But as you can see, it just start going, and here you go. Here's one that a lot of people recognize, the 23.6 Fibonacci retracement level. Then you have the 38.2, 61.8, 1.68, so on and so on. And then what I did was I took all those numbers, and then I used I square rooted all of them to see what numbers that would come up with that as well. And so I found some interesting correlations based upon the things I had been using in the past, but moving forward in the future, what I'm doing now. And so, like, one things was obviously the 50% level isn't a traditional Fibonacci retracement level. It's just 50%. That's a lot of people use for it, things like that. But what I found was when you take the square root of the 23.6 level, you get 48.58%. Pretty close to the 50% Fibonacci retracement level. So I started using that. Here, instead of using the 1.236, which again I know a lot of people use for the extension level to have profit targets, take the square root of the 1.618, you get 1.272. This is also what the level my friend used, and how obviously he came up with it. This is nothing new that I discovered. I'm just basically copying what one of the things that my friend was doing. Is I started, so now I'm starting using the 1.272 as my extension level target that I'm looking for. And then also one thing I noticed is instead of using the 200% Fibonacci extension level, I'm going to use the 2.05817, which is just the square root of the 4.236 level as well. So that is kind of how my Fibonacci retracement and extension targets have slightly adjusted based upon the different kind of functions I came up with over here. And so going over to the charts here real quick, we can see here it is going into Thursday session right here. We have Wednesday, Tuesday, and then Monday right here. One of the things I started doing is to help clarify, obviously, when you're in uptrend versus when you're in downtrend, when you're in a consolidation area, is one thing I had done in the past is I would just slap a 200 moving day average on there. I think this is an exponential one. And when price just starts cutting in and out of right there, it's an easy tell for me to realize, look, this is in consolidation area, so you need to be trading from the extreme edges of the range. Don't try to get caught up in the middle of this right here. And obviously, when price is on the north side of the 200 moving average, it's an uptrend. And when it is on the south side, we'll be looking for a downtrend for it right there. So that's one that changes. Two of the other things I started doing was looking for a reversal pattern, whether there's one at the top or one down at the bottom. So one thing I noticed, we're going to go to the weekly chart here, SP500, and apologies, haven't gotten into covering the exact rest of this week for SP500. I'll put a timestamp in the video, so if you just want forward to that, you have to listen to all this mumbo jumbo. So what I noticed was when there was a topping action before there was reversal, there's a pattern that seemed to happen quite a bit. And basically, it's probably the head and shoulders are very similar to it. Basically, what it is, you get a spike up spike down, and you get that higher high, and then the rest of the time, this low right here and this high right here do not get broken. But what they do is they create a ledge right here, and when that closes and gets below it, that's when you start generally having this sell-off for it. You can see back here on the last two times when the S&P 500 really sold off, way back over here of the 2000 dot-com crash, and then in the housing market financial crash of about 2007, it had this same type of setup where you would have spike low, spike high right there. Then you'd have a low, but it didn't break that low right there. You go up and have that high, didn't break that previous high. So that created that little shelf right there. When that broke below it, then the rest was off. It just continued to break on, going lower and lower. And so now when I'm looking at highs, that's one of the things that I'm looking at right now is when there could be a potential sell-off when we get into the consolidation phase. I look for that setup. For going into the downtrend. Now, for going into the uptrend, but excuse me real quick, let me back up real quick. It doesn't always work, obviously. Nothing works 100% of the time. So there was times when I was just in the past just trying to trade straight off of this and just trying to say, hey, when this broke out, get right into it. But as you can see right here, if you're in a strong uptrend, it's just going to just destroy you right here. So you can see it just barely broke out right there and then took straight off again, because I just want to show a couple of times when this thing didn't work at all. Here you have the spike low, spike high. There's a higher low right there, lower high, broke out, didn't close below it, but then took right off again. Here you have one right here. Now this one did come down and complete the target for it right here, but didn't create that huge sell-off for it. Came down and hit the 1.272 level, and also had a 200 EMA right there as well. But so what I'm looking for right here for the S&P 500 futures, if there is going to be a huge sell-off for it right here, here we have a spike low, we have a spike high, spike low. So one of the things I will be looking for is where the arrow go. So if price continues to go up, create a new high right there, come down, create a higher low where it doesn't break that low right there, goes back up. When that happens right there, and let me put that on there, my make-believe kind of trend line right there. So we have price going back up, making higher high, coming back down here somewhere, as long as it doesn't break this low right here, going back up, and as long as it doesn't break that higher high, this creates the ledge right here that I'm looking to be broken. And when that thing does close below it, wherever that would be right there, that is when I will probably start getting out of every single thing I'm in right there. Because if I'm wrong and price continues just come to go up and this high gets broken right there, then I'll just get back in the market right there for my 401ks and my stocks and stuff like that. All of my long-term investments. This is strictly long-term because this is the weekly chart right here. But if this setup does follow through like it has the other two times during the financial crisis and the dot-com bust right there, we are looking for two target levels. And again, this is just me drawing arrows on a chart. It says right there and right there. The first level would be looking at would be 1787, and the second one would be around 676, and that's where I'd be looking for it to complete, at least down there to 1787. And then if it really wants to fall through and complete it fully, you're looking about 676 right there. So right now, I'm not too concerned about it, and based upon the VIX as well, because the VIX, as I've talked about in previous videos, you still have this big gap right here, and this is on the weekly chart right here, coming all the way from about 18.5 to about 21.7. Now price is starting to get closer to it, but until this big gap on the VIX gets filled right there, I'm not too worried about the S&P really selling off. So between that and this setup right there, plus this little gap right in here, that's right near the highs right there, just as far as the imminent sell-off coming, I think if one is going to happen, we're still quite a ways away, a couple years away from it. But of course, I could be just totally wrong. But anyways, real quick, now moving, this video is going to be already way longer than anticipated, so sorry about that. But just wanted to explain kind of things I've been working on, what I'm currently using right now in my trading. Is now what I was looking for is, okay, what's a pattern that sticks out to me that would look for reversal from the downside to go long for it. And so one of the things that popped out was this kind of two move low, and this is actually a trade I took in SP500 today on the shorter term, obviously. So here on the weekly chart, when we were coming out of this the financial crisis right here, well, let me back up here real quick because this one's actually a stronger trend. We're coming out of the dot-com tech bubble right there. We have this push lower, this spike low right there, and then we have a second spike lower right there. So then what I look for when that happens is I look for this move right here. It needs to break this previous high. So you have that first spike low, there's the high, second spike lower low. Then once this gets broken, that spike high, we'll just draw a line right there to make it easier to see. Once that line gets broken right there, I start looking for a retracement to at least the 38.6% level. Now, for this setup right here, it never came back. It never came back to it. Price is too strong for it. It only came back to the 23.6% level, as you can see right here. But price came up, hit the first target, 1.272 extension level, and came up and ticked perfectly off of the 200% or the 2.200 points 0582 extension level up there before it sold off, created that short setup right there and sold off. Then we're looking for it coming out of the financial crisis down here. You know, you had the lows SP500 down around the 670s or so. Came down, had that first spike. There's the higher high. We'll go ahead and draw that line right there. There's the higher high. There's the low. So once this high gets broken, which it did right there, I'm looking for the 38.2% to come down and get hit. Didn't right there, didn't right there. Finally, it did right here. Price came down, hit off of that first target perfectly right there before we retrace some. And then secondly, for the second target, by this time, this is when the full upswing is underway. And as you can see, it hit that to the 200% level very easily. Now has just started continually moving up and up and up. So I just want to point that out. These are long terms, but let me real quick finally get to the SP500 futures before I think it's going to happen the rest of the week. So as we can see right here, there's Thursday, Wednesday, Tuesday, Monday. Starting off from last Friday over here, we basically had just a big rest of when the market opened here about 8:30ish. It's pretty much just from Friday to end of day Monday straight up. And then you can see price started waffling around here on the 200 EMAs. So we are in the consolidation area. Had a fake breakout lower move down there today, but just set up for a move going up to the upside today. But one thing I noticed that we do have right now is we have entered into that setup that I mentioned, that short setup, that topping motion right there, where you have sometimes they're easier to see than others. But if this is going to be a legit one, you can see we have that little bit of spike low right there. There's the high, there's the lower high. Higher low, or is that lower high? I'm not sure, but it doesn't matter. It didn't break that one up there. And now we have it broken down here to the downside for sure right there. So the targets we're looking for from this move to the downside, and yes, I'm looking for downside movement to the S&P 500, is the first one has already just literally got hit a little bit ago at 2945.75. But typically what I've noticed is for these moves in the S&P 500, they tend to move in threes when this happens right here. So this first one got hit. We're looking for this target as well to come get hit down here about 2927.50. And let me show you about real quick the three moves that I'm talking about. So here we have one from the previous week. I don't know, maybe about 2 weeks ago right here. It's a couple days set up for it. There you have the spike low, high, lower high, or excuse me, lower low, lower high. Finally, it kind of gets broken down here, but it really gets broken right here, and then you just have complete sell-off. So you have the first move, second move, and then third move down right there. And as you can see in these moves that are going lower, these are spike low, high, higher low, lower high, broke out, bam, down to there. And then finally, one last one right here when price had entered the consolidation stage for it right there. But what it did was it came, let me get the Fibonacci. Oops. It came, hit the 1.272 extension level, complete that setup. Then if we're looking for it to go back long again, let me show you that reversal long setup. You have that spike low. Okay, there's the high. We'll put the line on it just to make it easy to see. There you have that low. So now what we're looking for is the 38.2% level to come back and get hit. Once this black line got broken, it got broken, came back and got hit the target of the 1.272 Fibonacci extension level, and then look what happens up here. It hits right here as well, and then it just has kept on going up and up and up. But the big move that really came out of this right here was this one right here. If you kept on following it up, this is what all the big money was doing right here. Is came back in this area, got it filled between the 38.2 and about the 50% level, and then look right up here, hit that first target easily, and right now at the negative 1.058, which is basically the 200% Fibonacci extension level, created a double top, almost a triple top right there, and that's another reason why I'm looking for downside in the market coming for later. Yeah, it's almost at 10:30 my time. Yeah, hour and a half will be Thursday, and then Friday as well. So I'm looking for about two more of these setups to the downside. So that's what I'm looking for is short setups, of course. I could be totally wrong about this, and the market's going to pivot back up and continue to make higher highs over there. But hopefully, the way I explained it, it made somewhat sense. It made somewhat of some sense, unlike my speaking abilities here. So, anyways, that's what I'm looking for in the market, and a couple of things I have been working on here over the past few weeks. Hope everyone's staying safe out there. Take care. Talk to you later. Bye.